This is Patrick and Trading with Prime. Hopefully everybody can hear me. We're going to get right into the charts here. Actually, before I do that, just to let you guys know, for the first half, we're going to go over broad market analysis. The second half, we might go over a few charts. And then I'm going to go ahead and answer any questions that pertain to trading, like technical analysis / money management. There's something that I want to kind of get into a little bit. Answering questions that we can answer. We'll let people kind of dive in here until people start diving in here. I'm going to start going over the broad market technical analysis. So follow along with me if you'd like, and let's get straight into it. So first thing we're going to look at is the SPY. Excuse me, I had to cough. First thing we're going to look at is SPY. It's hard to say that this is, and of course this can all change. It's just what are the charts showing us right now. This can all change by tomorrow's opening price because we really don't know what's going to happen overnight. However, looking at the bigger picture, what are we looking for? What are we looking for some kind of turn or let's just say a signal or something that we need to pay attention to as far as a warning, as far as the market warning us that there could be a turn coming up into a turn. And so we really don't know what that looks like just yet. It's really hard to give upside targets to a market that it's at all-time highs. And I know across YouTube and across all the gurus in the market analysis, I understand that people do give upside targets. In my opinion, it is almost impossible to say that the market is going to go to a certain price and then say that it's going to either turn around at that price or just to give that price. We don't know. We just have to follow the charts until it proves us otherwise. And so how will we know? Well, you're going to see a huge reversal. It might not be this big like the coronavirus crash. It might just be a smaller kind of a candle, but it'll still be some sort of a reversal candle on the daily or the weekly time frame. Of course, I would probably start in the daily. So right now, it's highly likely, and I'm not saying that 420 is a price target. I'm just saying it's higher likelihood at this point that 420 would probably be an upside target. Just because it's a round number, not because I think that there's some sort of trend line that we could draw and we're going to say that it could get straight to that trend line. But it's pretty much higher likelihood now to go ahead and tag 420 or get near it. But like I said, anything can happen overnight. How's it going? No Kung Fu. So here's the thing is that right now, the SPY is printing all-time highs nearly on the weekly time frame. It looks like it wants to break out to higher prices, and so we have to kind of treat it as if it's going to do that right now. It looked like it went back down and back tested this previous breakout. And the breakout that I'm talking about, it's hard to see, but it's basically from the all-time highs down to this little breakout down to this bottom of the candle here around 409, and then now we're back to all-time highs. So that's the SPY. We'll dive into lower time frames here in a second. If you guys are looking for a trade setup on the broad market, instead of going long in the SPY or the NASDAQ, I would recommend the IWM, and I'm going to show you that here in a second if you guys are long the market. As far as getting out of trades, if you're currently long in the market, there's no reason to necessarily sell any positions as of yet. It hasn't been any indication yet on the charts, even though we are pretty high. There's no indication that we need to start selling our positions on a bigger time frame, on your bigger time frame speaking. But I also wouldn't be going long at these prices as far as I want to leverage my entire account. Now, if you want to put up like 1 or 2 contracts and you want to go long, that's one thing. But to over leverage to the long side, I don't think the risk versus reward is no longer favorable. Now, in individual names across the market, there are plenty of opportunities out there. We just have to find them. So looking at the NASDAQ, same thing, near the all-time highs, hovering around the all-time highs. We did have this price up here for a short trade around 338.19. And to be honest with you, I would take that same short trade 100 times over again because usually, and I'll say usually here, usually you do see a reaction at this price area because it was a prior high. Normally price doesn't like to just fly right through that area. Normally what you'll see is a little bit of consolidation, which you're kind of seeing right now, or maybe there was a little bit of consolidation intra-week, but that's not the correction that I was looking for. I was looking for a much deeper pullback, kind of like we saw back here in September, October, into beginning of November. So let's look at the IWM and kind of show you if you're long the broad market, you're looking for a long setup, this might be it in IWM. And I'm going to go down to a daily chart time frame, and I'll kind of Oh, I'm just catching up on my comment section here. Okay, so here's the thing: is on the weekly time frame, we're looking really bullish. We're possibly putting in what could be a head and shoulders pattern. We don't know if it's going to be a head and shoulders just yet. So far, it's not. And to be honest with you, it has to break the neckline, and it really depends on where you draw the neckline. And this is where you have to be careful: is the neckline down here or is it doing this? It's hard to tell. I wouldn't say that the pattern is bearish in any way, shape, or form until we break the neckline. That would trigger the trade for that weekly time frame. On the daily chart, we see something a little bit different. If I zoom in here, when I'll get into this in the technical analysis side of this video, I'm going to go ahead and dive into these sorts of setups. But just looking at this as of right now, we do see this rising bullish pennant, whatever we want to call this, but it's bullish consolidation because the previous move was to the upside, and now we're seeing this huge consolidation. So usually what happens is the market will break out in a continuation fashion. We don't know that it's going to happen, but usually that is the case. So far, it's having trouble at this area, so I don't know if this area is going to hold up as resistance. I think just looking at the last several days, it looks like it wants to break out. And this is why I was saying that this might be a better setup, because if we do get the breakout, back test, resumption, it might be more favorable to go long on the IWM. There might be a lot more room to the upside, which would the target would be around 230 bucks. Well, first of all, 230 and then 234 upside targets. That's a little bit better if you compare to like the SPY or the QQQ. It's a little bit better of a target. And the risk, what would you be risking? Well, if the chart fell back down in here, and let's say we had a failed breakout, well, I personally would be immediately stopped out of the trade. And I'm going to go to another chart here and show you why I would be stopped out in a failed breakout. Here is a picture of the failed breakout on the Bitcoin futures. And if we saw this last Saturday, really, but this is the same kind of pennant. Normally it plays out bullish in a bullish fashion, and it did break out. It finally broke out. You wanted to see Bitcoin hold that support, and well, of course, we all know it didn't. It had a failure, which is probably why it didn't just sell off to this point, but it in fact sold off even more. That is a failed breakout, and it is a pretty big sign of a bearish continuation move to the downside. Now, I'm not giving any analysis on Bitcoin. I don't know where it's going. I just think that this is pretty telling as far as last weekend's failed breakout. And if I go back to the IWM, I just wanted to point out, back on the IWM, hopefully I don't lose you guys. Back on the IWM, if we do have a failed breakout, I am not looking to go long anymore. So you could easily put a stop loss down here, even below Friday's low. You could have a stop loss down in here around 221.60. I'll let you guys know in the Discord if I do go long on the IWM. I'm not sure that I will necessarily yet, but I will let you know if I do end up taking that trade. What I've been looking for personally is I'm already looking for some sort of a pullback, maybe a high or low scenario, let it kind of break out. Just like we saw in NEO, which we'll get into NEO here in a minute. Just wanted to show you the IWM. And let's go look at the financials as far as the larger picture scenario goes. On the financials, we're looking pretty bullish. It looks like we back tested down in here, and then we're since then rallying away from the lows down there. So maybe take a look at Bank of America, Wells Fargo, Financial, Citi. What else? Let's go to TLT. The bonds are looking pretty good, looking healthy as far as a bounce play. I don't know if this is necessarily bearish consolidation just yet. We don't know if this price action is a bear flag kind of scenario. It definitely could be a bounce, maybe a dead cat bounce, and then continuation to the downside. I don't think so, though. I'm leaning more towards this is probably a bottom for now, and especially if the broad market rolls over, if and when the broad market rolls over, I'd be looking for TLT to kind of shoot up into the moving averages up here around, well, for starters, 143, maybe up here to 145, and then into our resistance at 148. That is TLT. What else do we want to look at? Transports? Let's skip the transports. We have too much to go over. Okay, that's it for those. I just wanted to go over the basic broad market, what I'm looking for. As far as the SPY, taking a trade, like I was saying, if you're trying to go long in this market, I think the risk versus reward is no longer favorable. But if you're trying to go long in, like, let's say 1 or 2 contracts, or you're trying to pick up a few shares, fine. But I wouldn't necessarily leverage the entire account into a trade like this. We're already pretty high on the chart. And I think that when we eventually do see the pullback, if and when we see a pullback, it will be a correction. So I'm not sure what those percentages are just yet. We'll have to actually wait for it. But it would be reason to suspect that around 8 to 12%, somewhere in that range. I really don't want to get into the downside because the chart is not showing us any clear picture of any kind of turn in the market as of yet. Okay, that's it for the broad market. Really quick, let's go look at the equity put to call ratio since we're on the subject of the broad market. Where's my little, does that show it? There we go. This is what I thought was a little bit interesting on the put to call ratio. We're back at 0.55, which I thought was a little bit interesting. Normally in an extremely bullish market, you'd want to see the lower equity put to call ratio. In this sense, it looks like people are starting to buy a little bit more puts. And that's a little bit interesting to me. Why are people buying puts when we're getting, probably because of where we're at in the chart. But normally when it gets really extreme, like down here around 35, which is pretty dang extreme, as far as there's a lot of bulls in the market, getting back up here towards 0.55, 0.60, it's not giving us a picture that there are people that are bearish out there, but it's giving us an indication that option traders are starting to price in a possible turn in the market within the next couple to a few weeks. Don't know if that's going to happen either, so don't take my analysis on it. I think there's a turn coming. Okay, that's it for that. If you guys want to go ahead and start posting your tickers. If you guys have any questions on technical analysis, now is the time. Post it in the comment section. I want to dive into technical analysis with you guys. That's why we are here. We're here to try to help. And a bigger part of that is money management. How can we position ourselves so that we are more profitable or we're not losing as much? Because as you know, trading is a lot of times more important to save our capital than to spend the money and lose the money. It's more about money management and less about trading. And it's about running this as a business. So if you have any questions, feel free to post them on the comment section. I'm going to dive into a few charts and until I start seeing some questions populating the little screen up here. Okay, so first one we're going to look at is MARA. I would say that this one is probably following Bitcoin a little bit. I don't know necessarily, but there you have a failed breakout also in MARA. I don't know if it's going to hold as a failed breakout, but again, for the future reference, when you guys ever see this kind of price action where the market should have broken out, it didn't, and then it sold back off, that is actually more bearish than had price just stayed in the consolidation. Like let's say price just stayed in here, right? It's more bearish to see a fail breakout than price staying in that consolidation, which is probably why it shot right back down to the bottom end of the range. Now, I don't know necessarily where MAR is going from here. I don't necessarily like the pattern as far as the last week goes. I'm not sure if I'd be looking for a long trade just yet. You could buy at support. Just keep in mind that the more we are to bounce in support, the more likely we are to fall through support. But yes, technically it is at support, and you could be long in this price area if you know at what price you are going to be stopped out of the trade. And let's say that price is down here around, let's say you went long on Friday, $27.50, maybe even $26. If it's shares, option contracts might be a little bit different depending on how you trade options. Let's look at pins. So pins, we have, it's hard to say where this is going. One thing I know, if we get above these moving averages, and more important than the moving averages, just to throw this down there, is this closing price of this huge candle right here, this huge candle. That closing price, if price can get above that area, I'd be willing to take a long trade personally. I would like to see some sort of pullback in here. I don't want it to shoot right above there yet. I would like to see some sort of consolidation in here first. And the reason why is because then when we do get the breakout into up above that closing print, once we get that, it'll be pretty fast move to the upside as far as the momentum is concerned. But where price just came from around $70 in the last 3 days, now it's up to 74. I would be not willing to take a trade going, let's say tomorrow morning, it gaps higher in the morning. I'm not willing to go long at that kind of a scenario. I also would not be willing to short this as of yet. I would want to see a lot more consolidation. Maybe it did something like the consolidation thing and then took out some sort of low down in there. You could possibly look at a short trade, but for me, this one is like, I wouldn't be trade this one way or the other for right now. I'd want to see a little bit more evidence one way or the other. Okay. AMD. Yes, Bitcoin call is, I don't even know what Bitcoin is at. We just looked at it, right? Are those the futures we looked at? Well, it's not doing too bad. It's down 1.17. I did a post in on Zip Trader, and there some of the guys aren't too happy. Okay, so what were we looking at? AMD. Okay, AMD. I like AMD. You know, I was considering a trade a couple days ago, and I didn't actually take it. I kind of wish I did. I just don't like this kind of choppy behavior. I want to see consolidation breakout. I like patterns more than I do anything. So what I'm personally looking for what I'm looking for in a trade usually is some sort of pattern in here. So if we could do this, and let's just say hypothetically it did something like this to build a lot more. I want the energy. The more energy we have in this versus like drawing a trend line up here and saying that it broke out or broke down, the more energy we have, the more sideways consolidation, the higher degree of momentum we have coming out of that area once we do finally break out. So that's why I like to let the chart give me the patterns, is because it gives us time. It gives more traders an opportunity to get into the trade, and a lot of people are holding on to it. And then people dive into a lot of short covering. If it breaks out, tons of short covering, because there's probably a lot of shorts that are in here underneath this price around 85. There's probably a lot of longs in here down here around 76. So let it do its thing, let it go, and then eventually get the breakout. That's personally what I'm looking for. And then be mindful of where the broad market is at. We just went over the QQQ. We didn't go over the SMH, but be mindful of where the broad market is playing. NEO, and as an example of that breakout after a type of consolidation like we saw, we had a trade alert in NEO a couple days ago, the day of this breakout. And this is why I like these patterns, because the type of momentum that we get when you can draw a pattern on a chart, and it's very clear. I mean, this one was a little too clear. Sometimes when they're too obvious, it's a little bit skeptical. But for this one, you see the type of consolidation in here, where think of how many weeks are in here, or how many months are in here. Someone's FaceTiming me, if you guys can hear that. So like in here, going back till beginning of March, right? This consolidation. Well, we broke out to the upside. So trade alert, trade executed. Now we're looking for upside targets of 41.74. I forget what the targets I put. I put targets in the Discord. I can't remember what we said though. 41.55, maybe up here, probably up here at this next pivot at 44.30, and then a pivot gap up here around $46. I think that we'll have a little bit. This will be the trouble area. This will be the trouble area, the trouble spot for NEO right here, just because there's a pivot high right here. And that is a pretty significant area where the market, where NEO fell down from. It could not get over that area last time on heavy momentum back there on whatever date this was, beginning of April. So I would expect, plus the moving average coming down, I would suspect that there would be a little bit more resistance in that area. So just be watching out for that. If we can get above that area, if we can consolidate in here for a couple days, I'd be willing to take another long trade. Yeah, that's where we're at NEO. All right, let's go to the next one. Dun, 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 dun. Okay, here we go. Bullish above all the moving averages. Obviously, I don't know. Not my kind of trade to the long side. Unless you're already in the trade. This is not a trade that I personally would get involved in until it consolidated. The opportunity was back here. If we missed it, like me, I missed it. So I'm not willing to go long. This actually was another nice area right down in here. Consolidation, and then took off. But where is it going? I have no idea. Is this what kind of, let's put it on the, I don't know where it's going. No idea. All-time highs. I mean, I would just hold on to this, just let it play out. If we can get some consolidation in here, if it traded sideways, higher lows type of thing, consolidated, maybe it comes down like this and then breaks out. That's the kind of trade setup that I'd be looking for. Only because I would be favoring the risk versus reward rather than trying to just ride the higher, sell it high and or buy it high, sell it higher kind of scenario. So well done if you're in that trade. Set maybe a stop loss down just underneath each daily candle, maybe. Target. You know what was a little bit interesting? A couple weeks ago, let me do something here since I have you guys here. And let me put it back on this one. Oops. No, let's do this. I don't know if it was last week or the week before. I noticed something a little bit interesting that on the week, I believe it wasn't Friday's close, but it was last Friday's close. I saw a lot of consumer defensive and real estate. It might have even been real estate, energy, utilities, industrials. I saw this area up here green, and I saw a lot of lack of support the rest of the broad market, which I thought was a little bit interesting because normally you only see that when the market's coming into a near-term top. People are getting a little bit more defensive. So I thought that was really interesting. I don't think it meant anything. I think it was just it might have just been random. Sometimes you see that kind of thing. But back on here, I think that you can be long on this area. I do like target. I think you could be long in here. It's getting up there, you know, like, but I think it can still continue to run. I think you can put a stop loss just underneath this prior area of consolidation. Plus you have this support in under here. But this prior area of consolidation, not normally price isn't just, let's say this was a high, right? And the market's going to sell off from here and this is a high. Price doesn't like to just go right through prior consolidation. Now, this consolidation isn't as strong as something like this, right? Like, let's say this is consolidation. When you have several month-long consolidation period, price doesn't like to just shoot through that area without some sort of black swan event. But also, same with this area where we had the several weeks or 2 weeks of trading sideways and consolidating. Again, price doesn't like to shoot through. So right now it's having a little bit of harder of a time getting through that area, which sometimes you can take those bounce trades off of, especially if it's intraday and you're looking at a daily chart and you swing back into the intraday time frame and take a bounce trade during the week. But I do like this area. Target's not for me. I think the opportunity in target was a while ago, but again, saying that, it can continue running up to like 210, you know, 220, 230, 240. There's nothing there's nothing in the way. You know, there's not really any overhead resistance above this, nothing to stop it and to get it to sell off from until we actually see that day. Okay. We're off of the charts. Let me know if you guys have any more charts. Oh, you guys are posting some. How's it going, Mark? I put in DWD. Okay. So what I wanted to kind of go over with you guys, now I want to dive into, how's it going, Tyson? I want to go into a little bit of technical analysis because I have had a few questions. Let's do this and try to get some sort of analogy, some sort of thing on this. Well, actually, there's a few things. One is for swing trading. One is for a little bit of money management. How's it going, Jason? One is for money management. I'm gonna lose my place here. Well, so here's what I want to say, because a lot of times I'll do this just so you guys can kind of see how I do it. I'm not saying this is the way to do it. This is how we trade. There are two times that when I go long, I'm like pretty heavy, right? Like sometimes you guys will see how many contracts I have. I've got like 50 something contracts or 60 contracts, and other times I only have like 1 or 2 contracts. Well, like just to give you an analogy or to run something through, just to show you. Right now we're at all-time highs. I'm not going to buy 60 contracts to the long side, but it doesn't mean I'm going to short the market with 60 contracts either. Now I might go long with 1 or 2 contracts. Let's say we get a pullback to Friday's low. Let me zoom in a little bit so you guys can actually see the chart. Let's say, okay, this is our support. Here's our resistance. Okay. And so we open up tomorrow morning. It's a gap down a little bit. The futures are down 0.02%. So we're pretty much flat. Let's say tomorrow comes and the market spikes up a little bit. I'm not going to go long, right? I'm not even going to buy 1 contract going long. I'm not going to chase a gap, especially higher in the morning. But let's say hypothetically tomorrow we open up down a little bit. And let's say we sell in the first thing in the morning, we see a sell off, really fast momentum to the downside. I'm going to go long, right? Now, let's say the market, that's one scenario. Let's say the second scenario is the market fades down there. I'm no longer going to go long. And I'm going to go through this pretty quick. How's it going, Eric? Good to see you, dude. I'm just going to kind of run through this just so you guys can see, because I feel like there are some things going on with a little bit of money management side of it and some contract side of it. What we want to see in the morning, we want to see a very fast spike down. And it's kind of counterintuitive because the design of a spike down in the morning, there's a whole, just like sometimes in the morning you'll see a spike up and then it'll be sold into. Right? Same thing goes to the downside. It's just going down to run a test. And we have to be mindful of that test. And it's actually a good area to go long, putting a stop just underneath that price area. Now, I'm not going to go long with 60 contracts because look where we're at in the chart, on the daily chart. We're at all-time highs. But I'm willing to go long. I'm willing to step in front of that trade. Oh, this whole time you guys couldn't even see that? Yeah, no swearing on the air. Thank you. Okay. I'm not going to go over that whole thing, but you guys kind of get the point. We want to see momentum to the downside, right? We don't want to see price trickling down slowly down there. We want to see momentum to the downside first thing in the morning. So let's go to hourly time frame. I'll kind of show you guys what I'm talking about. You guys, we got to fix this. We got to fix this up here. So I'll show you right off the bat. See right here. Here's an example of that. See the spike higher in the morning? Can you guys see that? You're on your cell phones. Let's do this. Let me do something else. That's kind of as much as I can zoom in so you guys can see it. There, is that better? Can you guys see that now? I'm gonna zoom into this one little area because I really want you guys to see this. Where did it go? Oh, right here. Okay, now you guys can really see that. You should be driving, not watching your phones. Okay, see this spike up in the morning? This is what I mean. I don't want to chase a spike up in the morning. I'm not going to go long on a gap higher in the morning, and I'm chasing price, and I'm especially not going to go long when the price shoots up in the morning like this. Now that's different enough if the market's selling off in the morning. Let's say we open up the day. Well, I got to be careful with that. Let's say we open up the morning kind of flat, and the price goes higher, right? If the market's been selling off for 10 days and we're at key weekly and daily support, I'm going to go heavy, right? There's a difference there. But this spike up, the market's in an uptrend, it's getting up there. We're getting a little extended here, whatever the definition is for extended, like I don't know. But the market rallying over and over again, it's getting high. I'm not going to go tremendously long on the contracts. I don't mean to get so granular with you guys. I just wanted to give an example of not taking a higher price in the morning because it gets faded. So it really becomes like more of like some sort of, I don't want to say it's like art or whatever you want to call it. Here's an example of a spike higher in the morning, but the difference is the market was selling off and we were at key support down there, right? Market has been selling off. So this would be a different case. Plus it was putting in a bear flag pattern, and here's the bear flag. Oh, ticker is SPY. I'm sorry. You can see it in the top left side of the screen. Well, now you can see it now that I fixed the screen. Hopefully you can kind of see it. Okay, so here's the thing with the SPY, for instance. It's coming from a high price, and it's coming from a higher price. It's been selling off for several days, right? And it's coming down in an area where it's consolidating, looking like a bear flag. Not just looking, it is a bear flag, right? But it plays out as soon as it breaks the high of that flag, then you can go long. And it's not like, not to be patronizing here, I'm just saying like that's, yes, resistance we can short at, but we got to realize where we're at on the chart in the bigger picture, or on the hourly chart, the daily chart, the weekly chart. Like, where are we exactly? Now this, I don't know how you could have traded this, but I was willing to take the short trade halfway up prior resistance. Now I got 500 lines on the screen. I'm willing to take a short trade in here. With this kind of a candle, I'm willing to take a short trade in here, and I'm willing to short the high, right? But I'm also not willing to carry that over the weekend, and I'm willing to take a stop loss. So different times is the time that we need to apply different amounts of money. So am I willing to, let's go back to the daily here, and please, I hope I'm not losing you guys. Tell me to slow down if I'm going too fast. I wanted to button this down. So for those of you guys who are swing traders, right? I'm a swing trader. I'm at work all day, right? I'm literally working all day. I'm posting in Discord and trying to like stay on this. So for swing traders, don't be scared to go long. Don't be scared to go short. If you're scared of a trade and you're losing too much money, no, let me rephrase that. If you're in fear of losing money, or if you have an ego with making a lot of money, then we're trading with too much money. We have too much riding on it, right? Because if we make it more, the more about money that we make it, the more likely it is that we're not going to make money. And I know that's so counterintuitive, but that's the thing, is like, if we might be spending too much money and it's affecting our emotions, right? You should be able to look at this chart and it should be a computer generated thing in your mind that I'm going to go long, I'm going to go short. I'm only going to spend $100 and I'm not going to spend $3,000 or $10,000 on naked calls. You know, when the chart is at 418 bucks. Okay. I don't mean to sound like an ass. Any questions around that? That's with that. Somebody asked me about swing trading. Just take it easy, guys. You know, for those of you guys, for people who are like struggling, take it easy. If you have any question about my analysis, like let's say I post an alert in the Discord, and don't hesitate to send me a direct message. Ask me why. What the hell do you see on the chart that I don't see? Tell me. Okay. Was that it about the money management? Trade with less money. We're trading options, right? We're not buying shares of SPY. Most of us aren't. So if we're trading with options, let's risk less money. If we constantly worry and think about the money that we need to make back, again, it's more likely that we'll lose more money. We need to get off of the mindset of we need to get off the mindset of I need to make this money back, because the money's gone. You spent the money to learn, right? And so we all need money, and it's a touchy subject, but I'm just saying, like, try to make it more than just money, and eventually the money will just come in as you make it more about learning. The money will start to come in, and then you won't think about it as much, I believe. Off the soapbox. Tell me to get off the soapbox. Cover calls on pins. Let's go take a look. Swing trading. We went over swing trading a little bit. Swing trading, daily chart, weekly chart, support, resistance. Oh, actually, before we go on to the cover calls on pins, remind me to go back to that. Remember the Neo trade we just took? Don't do any trading. If you're taking more than three... Okay, no, I shouldn't say that. Here's the thing. Just take the good setups, right? Take the Neo, the alert that we put in Neo. It was a breakout. Take the IWM alert we're about to put out tomorrow or the next day or whenever it breaks out. Take the IWM alert, right? Because when it's been consolidating this long, it's worth the trade. Yeah, we could lose the trade, but it's worth it. I'm telling you. Hey, let's look at Tesla. Somebody told me that Tesla doesn't follow technical analysis. Seriously? So Tesla, every single bullish consolidation that broke out, look at the move out of this, right? And Tesla's its own beast, but I'm just saying, like, we might not see that kind of bullish move out of other markets, but it's higher probabilities. We want to set ourselves up for the higher probability setups, the lowest risk setups. Save your money, buy these breakouts or breakdowns. Just buy the patterns, right? Okay. I'm off of it. Sorry. If you guys have any questions, I'm here. I know I said I work all day, every day, which I do, but I'm available. I will make myself available to help you guys out. I want you to make money. Cover calls. Yeah, there's nothing wrong with cover calls, depending on where you're selling your calls. You could make an easy. I mean, oh, I don't know. I shouldn't say easy. Nothing is easy in this market. You know, nothing is easy. 85 strike. We could go take a look at them. I mean, if you're holding the 100 shares, where's my? Okay, let's just say hypothetical. Netflix is a beast for this because you can sit here and sell calls all day long on Netflix at a certain strike. Where are we at here? What's the date? Today's the 25th. So, I mean, I like the monthlies. Yeah, like, it's up to you if you, however you want to do it. And where we say it was at? What's the? Where we say that dollar amount was? What did we say again? 85 breakdown. Right? Let's say hypothetically we do run all the way up to 85. If it were me, this is what I like to do. If it was me, I would prefer that the price got up there, right? On heavy momentum, just like we saw the heavy momentum here, right? Every time we see heavy momentum, that's what we want for prices going up to do what? It's going up to run a test. Heavy momentum to the upside. Guarantee you there's going to be resistance at 85. I don't guarantee you. I don't guarantee it. But we could sell that. Let's just say 85. I'm just kind of curious here. Primes list. What's Primes list? This is Primes list. Why do I have? Okay. So 271. And then you have to ask yourself if that's worth it, right? 271. What's the likelihood, do we think, that it's going to actually get up there and close above there, right? But I would prefer, personally, you can do that because you're going to make money on the shares, but I personally prefer for it to get somewhere up there in that region before I sell the call, personally. Just like Netflix, right? Netflix just does this all the time. Like, every single time it gets up to this 560 area, It's not guaranteed, but it's most of the time it gets up to this area. Now, overall, the pattern is bullish, and that's where we have to be careful. Like, the pattern is bullish on Netflix, believe it or not, right? But it's been trading sideways since July. So we just got to watch for that. Let's look at the weekly chart. Looks pretty ugly, right? But every time it gets up to that area, this kind of looks like a topping pattern now on Netflix, but it's still bullish because it's consolidating sideways, even though it doesn't feel like it on the daily. What other stock you guys want to look at? Oh yeah, like blackjack and when to double down. Oh, thank you for reminding me. I wanted to go over. Yeah, I got killed in MRVL the other day. Yeah, you might be right, Eric. Especially like I didn't actually look at all the contracts, but somebody just reminded me of something. See, now I'm all over the place. Okay, Bill Smith, like blackjack and when to double down. That's the thing. So that reminds me, because this is how I do it, and I totally went past this spot, right? So let's say hypothetically, let's just say this, right? Let me get off. Let me do this though. This is killing my eyes here. Okay. So like, let's say this area back here, right? Where we were buyers of the market, right? So here's an example of this. So you guys can see how Prime does it, which is probably not the right way. I'm kidding. Okay, so here's the thing. Let's say this is the support area right here, right? And by the way, this H pattern in here, this happens all the time in the market. So look out for that. That's pretty bullish, but people don't really think it is, but it is. Okay, so let's just say like that's our support right in there, right? And let's say you guys, because you guys will see me put it on alert, like that's my support. Let's say this is a secondary support down here, which we knew it became one, but we didn't know it was at the time, right? But there's consolidation in here. This is a prior breakout area. There's a prior pivot back here. So it makes sense that this would be some sort of support. Plus you have the 200 period, 200-hour moving average, right? So when you guys see my alerts, like you'll see something like this. I'll post an alert here for entry. And let's say my stop loss is down here around 380. Let's say stop loss is 383.12 or whatever, right? And so I'm buying a call. I'm going to buy a call, right? And let's say we're trading down here. I buy two more. I buy two more. I buy two more. And you guys have seen me do this. I buy two more. This is where you have to be really careful. I personally think that averaging down, we should add to positions that make money. We should be stopping out of positions that we're losing, right? Now, there are some option traders that don't do that. They'll buy a call and they'll just hold it forever, or they'll buy a put and hold it forever, which that's great. I'm not good at that. I'm good at doing it like this, and so this is the way I do it. And you should do whatever you're comfortable with. If you're good at doing it this way, that's great. But let's just say this. You see me do this all the time. I'm average down, or I'll buy a call. I'll wait like 8 hours or however long the next day. I'll buy 4 more. Next thing you know, I've got 30 calls, right? This is where you have to be really careful, because if like I'm comfortable doing that, right? With what I'm doing, I'm comfortable doing it that way. But that's not for everybody. And so you might see an alert. My alert's not telling you that I think the price is going to go up immediately. My alert's not saying like there's going to be a reversal here. My alert is like, I'm buying this, right? I could lose the whole thing. That's the alert, is like, I'm buying this. That's not like, there's no guarantee, but like, this is what I'm buying. This is what I'm selling. But like sometimes you might not be profitable if you didn't average down like I did, which I'm not telling you to average down. I'm not saying that right now. Like, I'm not saying average down. All I'm saying is this is how I do it. I'm willing to let this trade play out. So let's say we start rallying off this area like we saw in IWM and SPY last time we went long, right? And it takes off out of this area. I'm profitable before I even get to the price that I first entered the stock, right? I'm profitable. Depending on unless I bought a messed up contract, premium's crazy because of the volatility, but that's kind of how I do it. So let's say like we're into current price action. Let's go to the hourly chart. And when did we go long on this last time? I think it was down in this area. Or it was down here. Let me do this. So I just wanted to go over, like, I'm out of the trade. I'm not squeezing this out to the upside. Like, I'm not holding this every single day. Like, I might close some, close some, close some, close some. So if you're swing trading, my recommendation is this. Start out with the hourly, because this question comes up a lot. Start off with the hourly time frame, or start off with the 2-hour time frame. Once you enter the position, go to the daily chart and stop looking at it, right? Once you enter the position, stop looking at it. Turn it off. You know, go back to the daily chart and be more confident in your analysis, because most of the time you're right. And you guys know what that feels like. Like, most of the time you're right about the trade. Pins. So cover call pins. Dang, Jason, sub 600 on which one? What were we talking about before? I can't remember what we were talking. Spy, crowd, CRWD. Is that all the charts you guys wanted to look at? Any questions regarding the technical analysis? Regarding... Okay, so... Oh, yeah. We'll go look at MSTR, BA, UABS, Momo. Crowd. I was wrong on the last analysis I did on crowd, because last time I said it looked like it wanted lower prices, and that was this day back here. Calm down, calm down. I'm willing to admit I was wrong. Okay. I mean, that was a pretty bearish close, though, down there. And it did go lower the next day, but then it reversed. So, anyway. Reversing the next day, we're coming into resistance, but I know that looks like a topping candle. It could be considered a topping candle. The problem with it is we don't know that it's a topping candle just yet. And I would be willing to suspect that it's a fake top. That sounds funny. It's a fake topping candle. Like, it's not real. It makes you think that it is, but it's really not. It's going to have higher prices. That's what it looks like to me. But that's like the art part of it. There's nothing technical about it, because you see these candles, 3 of them, selling off into the end of the day or in the midday or whatever that is. Some selling pressure. The chart needs some more time to get above this area, probably because it rallied for this length of time. There was a lot of momentum, and now it's burning off that time. It's letting new hands get into the trade, and now we're above resistance technically. But it really needs to get above this pivot up here. Not just this one, but this one up here. A lot of selling pressure in this area. And you can tell, like, as far as the target prices, look how much the market sold off right in here, which is probably why the market's like coming up there. It's like, it's putting its toes in the water, so to speak, right? Toes in the water, toes in the water, toes in the water, and then it's going to break out. Now, I don't know if it's going to. I'm just saying that's what it looks like to me, that it wants higher prices. But while I say that, understand that it could definitely pull back to the moving averages and consolidate for more time in there, down to 210. So that probably doesn't help you at all. Looks like the 80 strike, RVL. This one I took a stop on because I was too busy with my short trade when we saw that huge down day in the market the other day. I was writing puts out in the IWM or the SPY or whatever it was. So I wasn't focused on this one. I should have been, because I let it run. I let Apple. I was in calls on Apple and on this one. I no longer like this. I don't like this red candle. Certainly we can come up to the high of the candle, but I also think that it's probable that there's a resistance halfway up. It's almost like a retracement. So think of it like this. You had a down move, and now the chart's consolidating. And normally, under normal circumstances, it goes to the lower side. But we don't know that's what's going to happen. I took the stop the next day. Closing out of that, I don't know. It was either that day or the next day I closed out of it. Resistance halfway up this candle, right? Psychological. Maybe if I go down to a lower time frame, you'll probably see a lot more resistance in there. I don't like the setup personally. But I mean, if you're in the trade right now, let's just say you're already in the trade. Okay, fine. If you're in the trade, I would, instead of putting a stop loss just underneath price, I would actually put it underneath this last breakout area, which is this candle right here. That was the last known. I know it's kind of a weird place to be a breakout, but that's the last kind of area it broke out. And so the type of candle that was, a breakup candle, we could easily put a stop loss below the low of that candle. So if you carry that over, that would probably be around $44.25 stop loss. Somewhere in there. That's pretty far away from current price. So if you are in calls, that could hurt a lot. So instead of doing that, this is what I would say. If you're already in a long and you're in calls, I would put the stop loss just below this candle's low. And the reason why, let me give you the reasoning behind this. The reason why is because if we take out Friday's lows, we're most likely taking out Thursday's lows, the bearish candle. I wouldn't expect that to hold if we're going to take out Friday's. And if we take out Thursday's low, we're definitely going to be headed down to this lower low or even maybe the pivot low. That's pretty far. That might be painful. MSTR. MicroStrategy. Yeah, it kind of looks like a Bitcoin scenario. You know, I had the same one. It was Invu. You guys know I've been pumping this bad boy on the Discord. Invu's like one of the, you know, they do a bunch of stuff. You got to check them out, but for crypto anyway, they also mine Bitcoin, and I love this chart. I love these breakouts, but this is some pretty wild moves. I mean, you had a 537% move in a matter of a week. And so it definitely probably needs more time. And so going back to your MSTR trade, shares, I think you can hold for a long time. I mean, it really depends on, I don't know anything about this company. So, and I'm not like a crypto, you know, I don't know a lot about crypto, but maybe at support. Yes, at support. You know, we could put some sort of price action, something in here. But same scenario where it was a failed breakout, which is probably why it found itself on the bottom end of that range soon, because it was a bearish failed breakout. But it's in the consolidation still, so maybe we'll see a price back up to that. Maybe it'll consolidate more, and then you'll see some sort of breakout. UAVS. So I don't know if that helps. Hopefully that helps. You know, I mean, if you're holding it long term too, like for me, like I like to trade. I mean, I love holding things long term, but I'm closed out of a lot of long term. I've been adding back slowly. UAVS. How's your guys' weekend? Yeah, it could be a triple bottom. I mean, I just look at it like, yeah, I mean, it's a triple bottom, you know, as far as the last chart we just looked at. I don't like to say double bottom or double top or triple bottom or triple top. Personally, I don't use that in my trading because I usually like things to break out or break down. And so let's say hypothetically it was a triple bottom and then it broke out. Then I would say triple bottom, now we have a breakout, which would give me not an assign, but it would give me it would give me a price target to the upside, which is what I'm after, right? No, we haven't done pen yet. We'll go into pen. Like we can do pen. This chart I like. Who just posted up? Eric posted this. Eric. So this I like. I like this kind of a setup. We can understand the consolidation in here, right? Because of how far it's run. I mean, what was this at? Like, I don't even know. I want to go back. But I mean, 580% in a matter of since December or whenever, since November. But on the bigger picture of this one, it might need a little bit more time. Like it would be too easy. I think it might need a little bit more time as far as let this pattern play out. Let it come up to resistance, right? We don't know where it's going to pull back to, but let's say hypothetically it does run all the way up here to resistance, pulls back. I'd be willing to buy that dip personally, but I'm not saying with a full position because that could hurt watching it come all the way back down to support and still being in a full position. So maybe we could load a quarter of a position up here, load another quarter on the bottom, wait for the breakout, and then on the breakout load like half, you know, however you like to do it. But I like this chart. I think that based on Friday's close, probably more upside. But I think that it needs a little bit more consolidation as far as a bigger time frame. But that would be a nice little swing trade if you took it to took it up to support around 25% or up to resistance. Momo. Same thing. Like I like this setup. I prefer bottom plays than I do buying high things and selling them higher. I like to buy dips, or I like to buy things that are really cheap or on sale. Not that they are falling knives necessarily, but I don't really like the monthly chart. But it looks like it could have come back down to this area down here. And it doesn't matter what time frame. I'm just kind of giving an example. This is a breakout area. We coming back in for a back test, and now it's trying to do something. Let's go back down to the weekly time frame, because that's a long time to wait, a month. Right here on the weekly time frame, we do have a higher low on the weekly time frame, a higher high. Let's go see. We haven't gotten over this area right here, this $20.40, but let's go to the daily. Daily time frame, higher low, higher low, higher low, higher high. Let's see what it can do as far as getting above these moving averages. It's already tried it once, failed. Let's see if we can get above these moving averages. I wouldn't necessarily, I might take something like this. You know, it's not for everybody, but I prefer drawing some sort of resistance in there personally and waiting for the breakout. But something like this, you could enter in with a quarter or a half kind of setup, or shares maybe. Don't know about options. It might be a minute for it to break out, but thanks for those, Eric. Where are we at? Where are we at? Pen. Was I wrong on the pen analysis the other day too? Okay, pen. No, I think I said lower prices, right? I mean, it had a gap down. Oh, no, you know what? No. I was right the first time, but then I said lower prices on this day back here, 420. I'm like, it looks like it could get some lower prices in there. Well, it gapped higher or straight across and then rallied all day. Now, just about pen though, like this isn't necessarily the trade that I like to take in between support and resistance. I don't like to get involved. I prefer taking a trade when it, like I was saying, like when it breaks down or breaks out. But if you are long, there's reason to suspect that a good stop loss would be around $85.66. But in a chart setup like this, I would raise that stop loss up. And here's why. Is because we are currently in a bearish consolidation. I know it doesn't feel like that on the rally that we had a few days ago. It didn't feel like that. But this price action, where we had this down move and then it's just creating a bear pennant, right? Bear flag. It doesn't matter. Bearish consolidation. Normally it results in lower prices. And that's why I say put a higher stop loss on it as opposed to the stop loss that's way down here. Because if it breaks the lows of Thursday and Friday, it's most likely going all the way down to the prior low around 80. Let's look at this up. Around 85, 80, 85, 80, say somewhere in there. But there's no reason why you can't be long. I just personally wouldn't get involved to the long side just yet. And like I was saying on stream, or on, like I was saying on, what was I saying? Like I was saying on Discord the other day, I would like to get involved if price got back above 97.09, which we're pretty far away from right now. Or, wait for it. Or if price got down to support, I'd be willing to go long. Maybe down to, you wouldn't believe me if I gave you price target to the downside. But the next area of support is $80, $80.37. Once you break 85. Okay, where are we at? And by the way, this is just my opinion. It doesn't mean that it's going to happen. Doesn't mean it's going to happen the next day. It's just what the chart looks like it's doing. My brother would always say, you smell what I'm stepping in? Pen, what was the next one? BFLY. All right, 6 more minutes. BFLY, we have this 25% because that means short interest, and I don't know what it is now. No idea. We have to go look, but okay, so daily chart, I don't like it. I mean, I do like the bounce, but I can't remember where we said we're talking about in the last analysis. I don't like it. It's sold off too much for me. Like I liked it. I like the chart for what it can do. Here's what would change this for me. A, if we got above the moving averages, which we haven't done. B, if we put in a higher low, higher high. So let's say the chart dips down a little bit and then does that, then I'd be willing to go long, or long like that. I'd be willing to go long. But until that happens, I'm not willing to call this a bottom, personally. I was willing to go long back here on whatever this was up here. Even then, I thought it was a little bit sketchy at the time because we're below all the moving averages. It just looks ugly, But bouncing here, we'll see what happens this next week. I'd be looking for a higher low to start. NNDM. Look at the weekly. Bullish, bearish. So normally how do you say this? Normally I like to look for charts that, like, when they're coming back in and it looks scary, like, okay, this was 65%, but that's a pullback. And I know it doesn't feel like that because it's selling off, but we got to realize where this thing came from. 51 cents, right? 51 cents to $17. And I realized that was over the span of a year or whatever chart we're on. 2,000 something percent. So it's reason to suspect, I mean, this is a pullback. I wouldn't say it's a reversal just yet, but there's also something I wanted to point out on this chart, and I kind of see this a lot, and this is where we have to be careful because this happened in Fubo, and it happened in PLTR, and it happened in CCIV, and it happened in like a million other charts. It's like, when you come back to support, this is how you know it's just a back test or not. And I know we're on the weekly chart, just bear with me. We're on a back test. You should see price rally away from that area on momentum, right? That's how you know. Now, when it comes back in a second time like this, and it's doing something like this, I like the curling nature, but I don't like how it took 7 weeks to get back down there. Now, it could find support at that area like it just did in this past week. It looks like it found support on heavier than normal volume, so that is a plus. But I don't necessarily like that we're back down to this area of 649 or whatever it is. I don't like that we're already back down there. Now, let's go back to the daily. Now, look at the daily chart. I do like this bounce in here. I'm just not convinced that that's support, right? Like, it was support the first time, but now that it's coming back down here, I don't know if that is support. Like, sure, we could keep buying the support, but like I was saying, the more times that it knocks on the door, the more likely it is to fall through there. So a way to trade this is like, okay, if it stays above, now if it stays above 662, it's a good long trade. But I'm not personally willing to go long. I wouldn't personally go long on this, but it's not my kind of a setup. But if this is, if this is your jam, if you're good at buying these support type plays, we are getting a pinch in here. So in my opinion, it's better to wait for the release of the pinch. Here's the pinch. It's better to wait for the actual release to the upside or to the downside before getting involved, because the move out of that consolidation is going to be worth the trade. Airbnb. What time is it? A couple more. Well, we're going to wrap it up here soon, but Airbnb. I like it. I mean, it's consolidating. I don't like the lower highs, but same kind of pinch scenario, right? Like, it's getting pinched in here, right? I think I like to wait. I like to draw the trend line. So let's go to a lower time frame and kind of look at this, because if I go to the 2 hour, it might look a little bit different. And so you kind of see the higher lows on the 2 hour, but don't forget to look at this bigger picture, because you might see these higher lows and go long, but forget to realize that we're kind of in a downtrend since whatever day this is back here, 210 February. So just know where we're at on the chart. We are at support. So for something like this, same kind of thing, where like, I want to look for an actual draw a trend line down here and wait for it to rally and then break out, because it'll be worth the trade. You're going to get enough momentum and most likely to carry on up to 190. You can start eyeing 190, right? You can start eyeing 200. Pivot high, pivot high, pivot high 210. Wow, what a coincidence. What a coincidence. Did I miss BA? Oh, BA. Let's do BA. I don't think we did BA. Oh, thank you for reminding me of BA. Remember earlier we were talking about the Tesla waiting for the breakouts? Let it consolidate. Let it consolidate. Let it consolidate. It's worth the trade. just like Tesla and every other chart we just looked at. Like, it's worth it to wait for it to set up. And if it's not doing the thing, and it'll take time for. It took me a long time to understand this, but it took me a long time to be patient enough to wait for that and to be waiting for it. Something I want to show you guys while we're on BA, because there's something I wanted to show you. Remember what we were saying about Bitcoin, like failed breakouts? How bearish are failed breakouts? Now, I'm not saying Bitcoin in general is going to be bearish. I'm just saying you had support in here, right? And then you have a downtrend. And what should have happened originally was this breakout to the upside, but it didn't. Anyway, it broke down to the downside, right? It's something that's funny about BA. And I'll leave you guys with this. This is a failed breakdown. Look what kind of move this turned into to the upside, right? I'm here to, like, I don't know what would happen BA, but more likely, let's say price never failed and went, or let's say price never dropped down below support in this area back here. Hopefully I don't lose you guys on this. This is the most important part of the analysis tonight. Most important thing I want to leave you guys with, so don't fall asleep on me. Okay, so here's the thing. It broke support, right? Okay, it rallied back up. What should have happened in this area right here is it should have continued to the downside because it broke down out of a consolidation, out of this several weeks of consolidation. It should have broke down to the downside, but it didn't do that, right? And so as soon as it rallied back up here, the upside movement you got out of it. Now, this is what's interesting about technical analysis, because had price not done that, let's say hypothetically, it never even went down here and it just stayed in this consolidation and then it broke out, I don't think it would have gotten up to here. I think it would have gotten up to here, right? It wouldn't have the same momentum effect if this little bit of price action didn't happen. And that's why I said it's important to watch crypto. We don't know that it's going to happen. We have to be aware of its we don't know that it's going to happen. We just want to be aware of it's a possibility. We don't know that this is a failed breakout that's going to lead us to freaking 2,500. We just have to be aware that maybe a lot of other people see this, right? So BA, sorry, I don't watch on the BA. That's what I want to leave with you guys with. BA, I like it. Buy it, support. BA is one that you could probably buy and support. Stop loss below 229. But I don't necessarily like this last move. It's bear flag right now, right? Bear flag, down move, bearish consolidation usually results in a down move. And I think that would be a good area to pick it up at 220. I don't know that's going to happen. I'd be willing to be a buyer of BA if we got above 240.84, which is this gap in here after some sort of more continuing consolidation. Higher highs, higher lows out of this area, I'd be willing to go long. Okay, that's it. Thank you guys for being so patient. Feel free to hit the like button if you gain value. Hit the subscribe button, bell notification. We will see you guys this week. Let me know if you have any questions. Yeah, I'll watch at 260 next week for sure. For sure. I wouldn't be surprised. All right, guys.